Hello, this is Tom Cloud with my bi-monthly precious metals market update. Today is decision time this week, this month, this quarter. You've got to make some tough decisions. There's so much going on out there. Old-timers like me can't comprehend the things that we're seeing going on in this world and in this country that I never thought I would live to see. From every issue, it seems out there, it's different than the way it was when I was growing up, except your money. Your money is still your decision. You can't blame a money manager. You can't blame me. You can't blame your spouse. You've got to stand up to what you believe, because there's going to be more money moved around in the next year, year and a half, up until the election in 24, than's ever been moved in the history of the world. It's going to move and be planted. The have-nots are going to have less, and the haves are going to have more. That's the way it works. And you need to get in there and decide how you want your portfolio to look. And you got to look at all the considerations. We'll start with inflation. That's a simple one. We all realize the definition of inflation right out of the dictionary is the increase in money supply that leads to prices going up. You just keep flooding the market with paper money. It looks like the Weimar Republic in Germany, and that's what you got to watch. Is this inflation is killing the middle class. How much a tank of gas costs, going to the grocery store and feeding a family of four. It is unbelievable what's on there, and yet you can't decide that or what you want to do and just cut back on eating or going places, but you've got to be ready. But once again, the haves going to get more, the have-nots, middle class, is going to get in the worst position. So just realize that anything that stays inflationary is going to cause into the chain interest rates to go up. Tomorrow, I believe on June the 16th, 2022, the Fed will raise rates at least 0.5% and probably 0.75%. So just think about that. If they did that many people are predicting, they're going to raise 2% more between now and October or September. 2% on a $31 trillion budget deficit is $620 billion. That was the interest on the debt last year. Now it's going to be double that. The interest rate on the debt is doubled because the interest is doubled, going from 2% average to 4% average if this plays out the way it looks like it is. So you've got another, like I said, $600 billion of interest piling on there. So you look at that and you realize that there's going to be inflation, and if they kill the inflation, they kill the economy. They can stop inflation with raising interest rates. They kill the bond market, slaughter it, and they kill the stock market. Now, the first decision you have to make is, how much are you going to leave in the stock and bond market? I mean, we're dealing with millions of dollars every day, people flooding out of them and moving in to gold or silver, or both. Maybe they lose 2% next year. That's better than all these ads. I've had more people call about the Dodd-Frank Act in 10 years. Now it's back in there about bail-ins and bailouts. Is the money in the banking system really yours? Yours, or is it theirs? Well, by international law, it's theirs. Countries aren't going to bail out anybody with money in their checking accounts. That's over. The FDIC doesn't have the assets to bail out a fraction, much less everybody that's got over $250,000. But remember, a lot of money above that would get taken. So yes, the Dodd-Frank Act is still out there. Remember what happened to the Monetary Control Act of 1980 when Jimmy Carter couldn't print money fast enough. So what did he do? They changed the reserve requirement with the Fed to 6%, which basically meant the Fed could then print more money and banks could print money and expand every dollar 6.5 times. So that they couldn't print it fast enough to keep up. Interest rates were soaring into double digit, 11, 12, 13%. And they couldn't slow it down because of what they were doing. So now the economy will just go on its face. Can you imagine just sitting there? I'm telling you, interest rates are going to go up. They are going to go up. Stocks and bonds are going to go down further and further as long as interest rates are going up. Are you going to sit there and watch it? Or are you going to have your broker tell you, oh, don't worry, it'll be back in 4 or 5 years. Why not get out now and have it back in 2 or 3 years by repositioning? So repositioning is the name of your game. Talk to all the people you want, read all you want, but reposition your assets to preserve your capital, not grow it, preserve it. That's the key word right now, is preserve what you've worked your whole career to make. So now you go into the interest rate explanation that someone asked me to elaborate on again. They thought they heard what I said, but what I said basically is this year, the dollar that's been beat up came all the way down to 93.68, is now sitting at 104. It's up, the dollar is up 15% for the year. And since that move, gold has gone down 14. Gold's still even for the year, but it lost its gain as the reason the dollar was going up is people were parking it because they were coming out of stocks and bonds. So it took pressure off of the issuance of government securities as people sit on the sidelines waiting and deciding when they're going to move back in and what they're going to move back into. So what I'm saying is, historically, we know that every 1% the dollar goes up against the basket of currencies, gold goes down 1. But the important part is when it does turn, and we think that is this month or next month at the latest, you're going to see gold go up 3% for every 1% that the dollar goes down. So if I think the dollar is going to go back to 94, and I think it'll get 3%, it's going to take gold to 2,500. And this is the boldest prediction I've ever made in 46 years of owning a precious metals company, 46 years. My bold is that gold will be flooded. We're seeing the biggest volume we've ever had in the history of the company, the biggest average sale in the history of the company, all taking place right now as people move out and into gold with a portion of their money. Gold is money. From the book, second book of the Bible, Genesis, the first book of the Bible, all the way up through till 1971, gold was money till Richard Nixon changed things. So get ready for that and get yourself positioned, because there's going to be a lot of decisions that you have to make. And all I can tell you is I could not sleep at night if I didn't have a good portion of my assets in precious metals. If you think I'm trying to sell you something, I am. Not because I'm going to make a little bit, because of you. I honestly care about every person out there. They've worked hard. They're working hard. They're raising families. They're retiring. They're battling diseases. We see every walk of life every day. Catherine and Dan and I talk to people every day. But I can tell you, the move is on. And when this thing, I've talked about Basel III several times, it keeps getting pushed back now to January 1st because they know the central banks are going to buy all the gold. So they're trying to alter it. They're already trying to alter it, and it hadn't even started in full blown. So watch that. Watch that too. That's important. I hope today I've answered a lot of the things just about investment portfolio and taking care of yourself, believing in what you read, get a plan. Don't be talked out of selling something, putting it on the sidelines because your broker tells you it'll come back. It probably will. But how many years will it take to come back and the damage it's already done? With this president and the policies that we've seen, it sure won't be during the next 2.5 years that he has left in office. So the last word I'm closing with, and key word, is repositioning. Call us at 800-247-2812. That's 800-247-2812. And we'll be happy to discuss this with you, talk about the different kinds of gold and silver and platinum that are available and the premiums for each one. So with that, this is Tom Cloud closing out my bi-monthly precious metals market update.